What's good, YouTube? It's Joel, and I'm coming at you with my very first trading video. This is essentially a quick guide on how to trade NAS100, and just so you're aware, this is for intraday trading. So this would essentially be entering a trade during New York session in the morning, primarily from 9:30 a.m. through 11:30 a.m. Eastern time. This is the time frame. This 2 hour window is when we'd be looking for entries, right? As a starting point, at the very bottom of your trading view, I would click the time and then set the time to New York time. The purpose of this is to make sure we are fully aligned with that our times are operating at the same time, right? Because you with this trading strategy, you'll see that price delivers or has like very it does very specific things within this time frame, right? So it has price moves and algorithms. So essentially, it has its own behavior. And the point of this is for us to identify its behavior so that as these setups form, pretty much every day, pretty much every week, right, we'll be able to spot it and then capitalize on it, right? So it's super important that we pay attention to the time itself and we set our trading view to New York time. So the very first step with this strategy is to first go onto the 15-minute time frame and mark up liquidity pools. So a liquidity pool would essentially be the most obvious highs and most obvious lows. So what we first want to do is you first want to find 830, right? So I'll just skip to another candle, right? So say for example, this is the 830 candle. So to the left of 830, what is the most obvious high and obvious low? Usually it's obvious like the extremes. In this case, right, the most obvious high is up here, right, which will mark it blue, and this will serve as our buy side liquidity. Now, the most obvious low, right, these two lows pretty much make an equal low, or quote unquote, for retail logic, double bottom or support, right? We don't use those terms because we don't trade with retail logic. We understand that retail logic, you're essentially just a target. Like you'll be used by the market as a target. Like you'll just be used as liquidity. So for me, most traders will see this as an opportunity to buy, right? Like this is support. This is a double bottom, like we need to buy. For me, this is liquidity. So um this will serve, this is the most extreme low, right? To the left of 830. So this will serve as our sell side liquidity, right? So we've already marked both liquidity pools here. The next step is that we want to wait for a liquidity grab. So this liquidity grab, it can happen like a few minutes before 9:30. Like 9:30 is super important because 9:30 is the stock market exchange open. So that's when we can expect volatility to enter this currency pair and for it to like really start moving and be aggressive. But the liquidity grab doesn't always have to be because of the 9:30 opening, right? Like it can happen a few minutes before, it can happen sometime after, right? But we just want to be aware that we want to see a liquidity grab of one of these major liquidity pools. So right here, it's preference on what you want to do. Some traders like to stick on the 15-minute time frame and just keep watching the candles on the 15 minutes until one of the pools get taken. Other traders like to drop down in lower time frames. So it's personal. It's up to you, is your own preference on where you want to stay. But me, I'll either stick on the 15-minute or maybe jump to 5 minutes and just watch price. So in this case, I'll just jump into the 1 minute just so for as much detail as possible. So we're just waiting because the 9:30 open happened here and price is now moving up. We're now expecting price to take out this liquidity pool up here, this buy side liquidity pool. So as I go through, right, boom, this candle right here, this is the 9:45 candle. This candle is the candle that spikes up and takes this high. So price has a tendency, the algorithm has a tendency to take out old highs and old lows, right? Like double tops, double bottoms, but usually the double top and double bottoms, like if it's one of the actual liquidity pools, which in this case, like right here, it would be one of the major pools, which is what we marked up here. All right, in this case, this was one of the highs that just got taken out with this candle. So once I seen this, it now confirmed my second confirmation of a liquidity grab. So when this happens, this is when I now mark this with an eyeball. I like to mark it the color of the liquidity that was taken. So in this case, right, buy side liquidity, I mark it blue. This candle came up and spiked above this high. I now put a blue eyeball, which lets me know, okay, liquidity was taken. Once this is now taken, what we want to see is a break of structure. So now we're waiting for the third confirmation of break of structure. So now, if I go one candle at a time, right, we got the liquidity. Now we want to see a break of structure. So right here, you're seeing this bullish candle. However, to the left and to the right of the candle, you're seeing that this bullish candle here, it has a candle to the left and to the right of it that's shorter, which means that this is technically falls as a higher low, right? So this is a structure point. So now at this point, I'm patiently watching price to see if it's going to break this level. If it breaks this level, this is a good sign that price is going to now shift from delivering like higher prices to now lower prices, right? The algorithm is shifting from bullish to bearish. So I'm waiting for this low right here to get broken. With the next candle, boom, right here. Not only do we get displacement, which all this means is that we're seeing an aggressive candle, an aggressive down close candle, which is a great sign, right? Because if we already took out liquidity, buy side liquidity, right, we are now anticipating price to break structure in order for it to go to the sell side liquidity. So now once I saw this black candle, the second it pushed under this wick, right, this was an immediate sign that now we broke structure to the downside. So now the algorithm is going to deliver price lower. So now we got the third confirmation of breaking structure. So now we need a fair value gap. So what a fair value gap is, this is essentially, if you're familiar with the term imbalance, is essentially just that. It's open body of price. When we get a fair value gap, we now need the gap. And this is absolutely like this is super crucial. We need this fair value gap to be within the range of this high, right? This is the highest point and the lowest point before the break of structure. So what I'll do is I'll actually put in some rays, right? So you can see what I mean, right? So we need the fair value gap to fall within this range from this high to the lowest point before the break of structure. So there has to be a fair value gap that appears within this range. And if there is a fair value gap, then we'll look to take the entry at that fair value gap. So the reason why I marked 3 to 1 minute time frame is because we're going to be using either the 3 minute, the 2 minute, or the 1 minute to find the fair value gap within this range to then take the trade, right? So what I'll do also to make it helpful, I will also draw a box. Oops. So I'll draw a box, right? So you can see this shaded area, right? This gray shaded area. This is the range that we need the fair value gap to appear. So now I'll get one more candle, right? And now we see a clear gap. So this gap, right? And I'll mark it so it can be super clear for you guys. This is the gap right here. So this fair value gap appeared, right? You just see only body of this candle. This gap appeared within this gray shaded box range. This is the range that it needs to fall in. If I jump into the 3 minutes, right, we're not seeing any gap. If I go in the 2 minute, we're also not seeing any gap, right? It's covered. The only gap that we see is here on the 1 minute time frame, and this pink gap falls within the gray shaded range, which is exactly what we're looking for. So this gap, this fair value gap is valid to use as an entry. So I'll shade it gray, right? And then I'll move this pink line here. So this is how I like to organize my trade. I like to put the pink line at the very top, the highest point here. And I like to put another pink line at my entry because I take it at the very beginning of the fair value gap. everything I have here is color coded, so hopefully this helps you guys follow along. The reason why this makes a legitimate entry is because if price slashed above to take buy side liquidity and then broke structure to the downside, it's most likely going to keep going down and deliver prices lower to then take out sell side liquidity. So it trading is a game of probability, so it is unlikely for price to want to continue going higher after this. Is it possible that it can? Yes, because no strategy works 100% of the time. However, because the game of probabilities, right? Because liquidity was already taken from like buy side liquidity was already taken, there's very little reason for price. I believe there's very little reason for price to want to go higher and break this high compared to it actually wanting to go lower. So this is why this makes it a safe place to put your stop loss, right? You're putting it at the very top of, the high. And, the structure just broke, so you're still at the very top of the move, right? So what I'll do now, because this fair value gap is valid, we'll now have our limit order. So I like to trade with limit orders. You can also market execute when price taps into the fair value gap. But what I'll do, I'll just put my entry here, stop loss at the very top, right? And then my take profit, right? My final target would be down here, right? This is the sell side liquidity that we marked, right? So retail traders see this as support, so they've already bought, right? This retail traders, this is what they're doing, right? They're going long, and their stop losses are like under, right? And then at this point here, you also have sell stops, that other traders like breakout traders, things like that, have down here. So most traders are buying up, right? And they're seeing, like you see, right, support, it pushed price up, so they're making money. And then guess what? This high got taken, so breakout traders are also buying even more. So the majority of traders are actually buying, but we're selling, right? And we know based on what the market is delivering to us that it most likely wants to go lower. So we're essentially trading against the grain of most traders, right? But we're also doing it in alignment with what the market is telling us. So here, this would be a valid sell entry. So now we're just waiting for price to tap in, right? If I hit the next candle, boom, right, it activates, right? So you see here, this candle taps in, and then we're pretty much in this trade right here. Of course, we have a tight stop loss, but in this case, this is the very high of the move. If price blasts through, then chances are our analysis was either wrong or the market just didn't want to deliver us this trade, and that's perfectly fine, right? Because this trade setup is a 1 to 6.43, so the risk reward is amazing, right? And if this one trade plays out, like you basically crush it, like you hit a home run, right? So this is why we don't concern ourselves with losses, because if we take losses, they're very minuscule, and we really don't have to worry about it, because we know when the market does deliver, which usually, with this strategy, I think this is the most powerful strategy. I believe that this is the truth with how market actually delivers and book price. This strategy is gonna deliver, right? And the strategy, like the risk to reward and the amount that we get off wins, like significantly outweigh the losses, right? So here, entry at the fair value gap, right? You see confirmation number 5, limit order at fair value gap. That's what we did here. You can market execute, whatever is your preference. And then now we just ride price. So what I'll do, since we're taking sell, so we took a sell position, right? We just want to mark targets. So here, I like to mark my targets in purple. So we have this low as a target. We also have another fair value gap right here as another target. So I like to mark at the very beginning of it, like these purple lines is where I'll take off partials. And then the sell side is our final target. So you definitely want to make sure you take partials, because the purpose for taking partials is you're never going to be right 100% of the time, and you don't have to be in order to make money in this market. So if price were to go down and not hit this target, like say I didn't take partials and I have my final target here. If price didn't take out this final target, and let's just say it reversed after this fair value gap, if you didn't take partials, you would walk away with nothing, right? But taking partials ensures that your account steadily grows, and even if you take a loss, right, like you'll still, your wins will significantly outweigh your losses. So anyways, the entries here, then look what happens, right? Price just literally just it tanks. It just nothing but black candles, nothing but bearish candles, right? You're seeing it. It's just price is absolutely just melting, right? Like you don't you only see like one bullish candle, right? Like this is just straight down, right? So this right here is, I just believe this is the truth. This is how the algorithm delivers and books price. This is what happens, right? So this right here, this is what I felt like I've been searching for literally since learning how to trade, right? Since knowing that this market existed, I wanted a strategy that was fundamentally sound, but a strategy that had logic behind, that also um, trades in alignment with how the market operates, right? And the way it operates, um, it didn't make sense to me. Like, I understand trading, has to do with psychology. I know it's not as simple as like this example that I'm gonna give, because I know a lot of trading has to do with psychology. But if in this market, right, you can only buy and sell, right? So technically speaking, right, like this should be a 50-50 chance. Should be a 50-50 chance for traders to win or lose in this market, right? However, this market has a 90-90-90 rule, right? Which essentially is that 90% of traders lose 90% of their money within the first 90 days. So that basically means 90% of traders lose in this market. And this is why, right? Because even before this move played out, we marked buy side and sell side liquidity. Um, we marked buy side and sell side liquidity, and then the market came and played both sides. And that was the question that I had. I'm like, okay, well, if trading is 50-50 because you can only buy or sell, why is it that 90% of traders lose? The only logical explanation must be that the market is playing both sides, because how else are all these people losing? And this example is the perfect example to highlight that for you guys, right? We marked buy side and sell side. Guess what? The market moved up, took buy side, and then it absolutely obliterated and melted and took out sell side. The reason why I didn't take this trade today or on this day yesterday is because this was FOMC, and usually the morning of FOMC is just consolidation. So this honestly surprised me that it delivered this setup, but this is an absolutely perfect textbook setup that the market will continue to deliver, right? Like this is just one of the many examples. And I'm showcasing this to you guys because I think this example is absolutely perfect and it's crystal clear in terms of its delivery, in terms of like this is just absolutely A plus textbook, perfect setup. So for anyone who's eager to put this in action, right, to back test, uh you can, this same setup also happened several times last week, right? So today's the 23rd. This setup that I showed you guys happened on the 22nd. This setup happened on the 13th, the 16th, and the 17th. The same exact scenario played out, right? So this doesn't happen by accident. This is the people who move the market, right? The market makers. The market should be viewed as being as being controlled and operated by one person, by just a single entity. And these setups literally happened several times last week. So if you're able to spot these setups, right, and take one trade a day, that's all I do. If if there's an if it's a day where I can trade, right, like if it's not like a crazy news event, which in the future I'll go over the days that I trade and the days that I don't trade. But if it's a day that I am behind the charts ready to trade, I only take one trade a day because that's all you need. Because you see this setup and it'll be clear as day. It'll present you the opportunity to take it. And then when you take it, right, you'll see that like more often than not, it'll deliver. And when it delivers, like it delivers. Like this is a 1 to 6. This is massive. And it's super precise. Everything is just perfect, right? So I hope that if you're someone who has never come across trading and you randomly stumble across my video, I absolutely hope that you consider learning how to trade. I hope that you watch this video several times to really dive into the material because this is the truth, right? Like this is how you can day trade NAS 100, right? Like intraday trading. Um, from 9:30 to 11:30, right? This entry right here that happened on this candle, this happened at 9:52 a.m. So right within the time frame that we're looking to trade, and this was an absolutely beautiful textbook trade setup, entry, delivery, everything. Um, and this repeats all the time. So that was the question that I had about being a profitable trader. It's like wondering what it felt like, wondering what it looked like. But now, even before like having the money to show for it, it's like I'm seeing this happening every single day. And so I know it's inevitable that my account will grow because I'm easily able to spot these scenarios happening. And that's all it is just you want to first acquire the knowledge and then be able to do it so much that it now happens automatically, right? You can instantly spot these setups forming and then be able to confidently take the trade and then manage it and just see it unfold. And if you take one trade a day, how are you gonna blow an account, right? Like it'll take a lot of losses and a lot of just mistakes and everything. If you're taking one trade a day and you're following proper risk management, right? If your psychology is down packed, it's like I went from wondering how can anyone succeed to now questioning how can't someone succeed in this industry, right? Like it's all possible, and the answers are right here in this video that I just showed you. So all I want to say is if you found this video to be helpful, if you know you like this video, please like this video. Please leave a comment if you found it helpful. If you have any questions, like I'll be here to help. Like I want to answer questions. I want to help create more profitable traders, and I want to have these videos go into detail and explain things, hopefully in a simple manner where traders can understand, and you'll be able to see this and be able to spot this and do this on your end. Because honestly, I want to help create more independent traders because I know the power in this, right, of being able to just understand what's happening in the market, being able to spot these setups, take these setups, and be able to grow an account, right, to be able to compound it over time. Like this is an opportunity for you to be able to grow whatever account balance you have to whatever amount of money you could ever dream of, right? It'll take time, discipline, right? And you have to obviously remain focused and I'm saying, like really lock in and be dedicated, be disciplined. But like anything's possible in this market. And it's just I want to help create independent traders and help people see this for themselves so that in due time, right, if trading is something that they want to pursue, they can have this serve definitely as an additional source of income, but this can eventually be their main source of income or have the possibility the potential to be able to take care of themselves and their family for the rest of their lives. And you'd have the blueprint, and the blueprint will be up here, right? It'll be in the knowledge bank. So no matter what's going on in the world, right, you'd be able to still trade, you'd still be able to take care of yourself and your family. And this information that you can pass down generation to generation, right? Like these markets, they're never going to change. They're always going to operate like this because they're beating everyone, right? And they're profiting. So this is just this has been a blessing to learn this information, and I just wanted to share with anyone who's willing to stop by, watch this video, and learn. So hopefully you found this to be helpful. Hopefully this opens your eyes to what's actually going on in the market. Um, and if you enjoy the video, man, any and all support would be greatly appreciated. If you can like the video, comment, subscribe, share this with anyone that you think would find this helpful or useful. Um, and yeah, till next time, peace.